Hello everyone and welcome back to another video. Please do subscribe if you have not already. I really do appreciate it and I'm really looking to grow my subscriber count by as much as possible, and I can only do that when I create more videos for you guys to view and enjoy. So I've done one of these before, but we're going to do a little update. Today is, we're officially in 2023. It is January 16th, Monday, MLK Day. And I just wanted to go over Tesla again. So as we can see here, Tesla is it's down a lot. It's only at $122.40. If you can see this over here on the left, as of this past Friday, the 13th. But analysts really see Tesla as a moderate buy, and they see like a 94% upside. There's a huge upside to this. Whether we'll get to that remains to be seen, but still, it's a really good buy right now per the analysts and what they think. It also has a lot of holds though, like 9, like almost half of the as many buy ratings are for hold. So it's people are either unsure or they want to buy it, which is why it's called a moderate buy. Not too many people say sell. That's for the long term of this, company's future. It still looks pretty bright, and literally no matter who's at the helm, it really doesn't matter. Just because of how much market share that they own in the EV space and how popular they are globally, not just in the US. If we look at the analysis, the actual score of this is a 7, and I typically say that I will not invest in anything that is below a 7. I do usually 7 and up, so that's just a really good thing to see, that it still is this. There's still enough, consensus to want to buy it, then sell it, and so it gives it like a good enough score. It's based on the price and analysis, and again, it seems to be pretty positive, so that's why this is at least a 7. And if we start to look at the fundamentals, we look at the income statement, we can see that annualized, look at how much Tesla has grown. That's crazy. That's crazy growth, that they've, far exceeded expectations for deliveries and whatnot. Lately, the past few quarters haven't been too great, but that's okay. You give them a pass because they have had some solid net income based on this. Look at the years previous, they were so dead in the water. They used to make no money. They used to burn money like crazy, and now they're actually on some pretty good footing. And if we even turn over to like the balance sheet, Tesla has a really good CFO, so they are really well run. They have, look at that, 17 billion in cash, like compared to 2016 when they had 3 billion, 2017 3 billion, 2018 3 billion. 2021 they had 17 billion in cash, and that's really good. Total current assets of 27 billion, and then total current liabilities of 19 billion. They have a good current ratio. They, have good working capital, so that's really good to see as well. And again, you want to see a high cash balance. That's really what we want to see here, and only long-term debt of about 5 billion. Look how much that is compared to what it was back in 2017, when they were at 11 billion. Like, to bring that down by more than half, that's huge. So anyway, that is this is a sign of a good CFO. Rising cash balance, lower long-term debt, so paying down debt, and then a good current ratio, meaning that they're good in the short term as well. If we look at their income statement, we can actually see that long-term debt issuances, they still issue debt, which was smart in an era of almost zero interest rates, 0 to like 1-2% of interest rates. And then we also see that, again, show signs of a good CFO and a good financial minded person. They're paying down probably older debt that they can retire that has higher interest rates whenever they signed that, and they're just paying down a ton of debt, so they're bringing that debt balance way down. That's really good on them, and that's really what you want to see from any company, is just that they're making an effort to bring down the balance of debt that they owe. If we keep going down, we can see that their net change in cash equivalents is, they have a negative number here, but that's because they've done a lot of financing activities, so that's what you want to see. And as far as acquisitions and whatnot goes, or sorry, I should say equity issuances. Yeah, they issued a lot in 2020 because of the pandemic, and that's not what you want to see. But they also have been doing some buybacks regularly enough that it helps. So if we look at a portfolio of it, from 2020 to 2022. So that's a 3-year span. 2020 we saw astronomical numbers from Tesla because they were killing it on their deliveries. They're doing really, really well, and they had a pretty good 2021 as well, 49%. That's way above beating the market. But then, 2022 hit Tesla really hard, harder than others, just because of the whole China lockdown. There's a bunch of semiconductor still problems over in Asia that we could see that was really not boding well for their numbers. And if you had invested, I had put in, let's do 10,000 actually. If you had invested $10,000 into Tesla in 2020, you actually, would have seen this kind of balance. Like you go from 10,000 to 84,000 to 126,000, but then 44,000. Like that's that's like a gut wrenching number. Yes, you're still up. You went from 10,000 to still at 44,000 within 3 years, but like that's not really what you want to see. That's not a number that's good enough to make you want to, feel good about it. Like this feels good and this feels good. This does not. So I would just be careful with Tesla, but it is an overall still really good company, and it is has good financial health, and they will probably kill it again with their numbers. As of like a few days ago, they're discounting their cars, and in 2023, they are eligible for a $7,500 tax credit because they're built in the U.S. and they are brand new. So anyway, just want to give you guys an update on this, and I hope that you guys subscribe and see you soon.